Good afternoon, everyone, and thanks for joining us for this lunchtime discussion on what businesses need to know and do to prepare for the next Black Swan event. I'm Xiao Wei, the Southeast Asia editor for Gen.T, and I'll be your host. So our panel today comprises 4 speakers from finance, travel, and sustainability, and they're armed with years of experience in their fields and will share some insights and lessons on what they have gained from doing business during a pandemic and how these insights can inform their future crisis management strategies. So Lee Williamson, our regional editorial director, will be moderating the discussion, which will run for around 30 minutes, after which we will proceed to an audience Q&A before we conclude the session at around 2 p.m. Hong Kong time. Now for some housekeeping matters. So today's session is being recorded and the video will be posted on Gen.T's web and social channels at the end of this week. This is a webinar, so all attendees' cameras and mics are automatically switched off. So if you have a question for any of our panelists, please drop them in the chat box and we will try to answer them during the Q&A later on. If you want to direct any of the questions to a specific panelist, please also mention their names with your question. The chat box is also open for you to interact with your fellow attendees, so feel free to do so anytime during the session. And finally, if you are posting about this event on social media, you may tag us at the handles that you see on your screen right now. So before we begin the discussion proper, we'd like to thank our partner, HSBC Global Private Banking, for making this session possible. So as a global bank, HSBC has played a very key role in supporting its millions of clients worldwide in navigating through the pandemic. So we'll hear more about its COVID recovery strategy from one of its top executives in Asia during the panel. But before that, let's watch a video. All right, so now we will proceed into the panel discussion and I'll pass the time over to Lee, our moderator, to introduce our speakers and to kick off the discussion. Lee, over to you.
Thank you, Xiao Wei. 659 days ago, the first recorded case of a potentially fatal coronavirus, later named COVID-19, took most of the world's business leaders by complete surprise. No one was prepared for the enormous economic and social ramifications of a deadly pandemic. Most businesses took a significant hit. Many went under. Only a handful successfully pivoted. Today, as we start to see what looks like the beginning of the end of this crisis, it's time to ask ourselves an important question. What about the next one? What lessons can we learn from the businesses that we were able to adapt and grow over the last 2 years that will stand us in a better stead for what's next? It might not be another pandemic. Most likely, it will be a consequence of climate change. But it could also be another global recession or some other unforeseen significant event that causes untold disruption to businesses and lives. If the last 22 months have taught us anything, it's that we have no excuse to be caught napping again. To discuss how business leaders can plan for the next Black Swan event, I'm joined by a panel with a diverse range of experience and expertise. Cheuk Wan is Chief Investment Officer Asia at HSBC Global Private Banking and Wealth Management. Fan is responsible for developing regional investment strategies across all asset classes for HSBC's private banking clients in Asia. Next up is Chibo Tang. Chibo is managing partner at Gobi Partners, an Asia-focused VC firm with a portfolio companies in health tech, among other verticals, with investments from seed stage to Series C and later. Patricia Dwyer is founder and CEO of The Purpose Business, which helps firms align business ambitions and strategy with a viable ESG output and sustainable operations. Its clients include MTR Corp, Cathay Pacific, Swire Properties, and more. And finally, Shang Chuang is Chief Financial Officer of Hong Kong-based startup Klook. Reliant on the health of the travel and tourism sector before the pandemic, the company successfully made a massive pivot from travel to at-home experiences and has in fact grown and successfully raised Series A funding since the onset of the crisis. We'll get into that and a lot more in the next 30 minutes. But first, all three of you, welcome.
Thank you, Lee. Thank you for having us.
Thanks for having us.
Okay. I'd like to start off with a question for all of you, please. Most business leaders read the news, they look at the data, they're smart enough to realize the extent of the climate crisis, but that usually isn't reflected in behavior. You know, it's a classic example of what psychologists call cognitive dissonance, when your beliefs and behavior just don't match up. As leaders, how can we fix this and how can we start suiting up for what's next? Pat, I imagine you see this an awful lot, so perhaps you can go first.
Sure. Well, thanks again for having us and for having me on this one. How do we prep for it? I guess you really can't be caught off guard. So the onus is on us to stay informed and really be able to talk about issues. And, you know, nothing is better than really managing risks, whether it's individual risks, whether it's corporate or, you know, organizational risk. And that goes for whether it's a company or a team. I think that is really, you know, the deterring the deer in the headlight scenario. So for me, it's that, just making sure we have no excuse. Media is there for us, and we need to know how to use it wisely, and we need to know how to stay informed.
Shang, what's your take on that? How do we encourage CEOs of companies and leaders to take what they know to actually use that to act? Because, you know, there's a difference between knowing things and there's a difference on acting on it. How do you kind of remedy that cognitive dissonance?
Yes, I think, like Pat said, I think one is definitely have the mentality that it will definitely come again. In what form, we may not exactly know. And I think what is important is to actually put what you think into action. So let's just use a very simple example. So BCP, Business Continuity Plan. As businesses grow, I think everybody talks about it, prep for it, have a lot of policy procedures, but not many actually rehearse it. And this is particularly relevant to all companies, particularly in Asia, because suddenly one day, none of us can go to the office. Right? So how do you continue to manage your business, serve your customers while everyone was working remotely? And Klook obviously faced the same challenge. We had more than 1,000 employees across 20 plus offices in Asia Pacific. And so we really had to rely on, you know, plans as well as rehearsals that we have previously done. And fortunately, you know, we had always been very focused on tech. And so everybody was able to work by simply having a laptop and the internet. So I think the key takeaway really is to be mentally prepared that it will come, and then not just think about it, but also rehearse and to make sure that you're ready when it does happen.
Fan, how are you encouraging your clients to turn what they know academically to be true about the climate crisis and turn that into actual action in terms of the investments they're making?
Yeah, we have done a lot of work on client education and client engagement. We think it is crucial to help our clients acquire more knowledge about sustainability. And through our sustainability events, we actively engage clients so that they would review their existing business model. They revisit whether their corporate strategy is compatible with the changing climate landscape. And we are actually facing a series of macroeconomic challenge, not just on the COVID-19 pandemic, with the climate risk, with the uncertainty surrounding the global recovery. It is crucial for our clients to build resilience in their business model. So through our active engagement, and we also deliver advisory service at the group level. This would help our clients mitigate the climate risk and also reinvent their business model in order to cope with all this new challenge. And it is also crucial for us to have a very clear mission statement share with our colleagues as well as clients. So as HSBC clearly communicated our ambitions being a net zero bank. So we are committed to work together with our clients to manage all these sustainability risks.
And Chibo, on the VC front, a lot of the companies you're working with, they're creating their business models now or very, very recently. So this shouldn't be a problem, right? In the early stage startup world, founders should be realizing what the problems are, and they should be building companies to try and fix them. So they shouldn't be ignoring them. Is that the case, or do you still see a kind of dissonance between the reality of what needs to be fixed and the kind of companies that are being born today?
I think obviously, a lot of companies at the early stage, they're still, building their businesses and trying to scale the models that they're working on. But some of those companies are focused on the problems and issues that we're talking about today. Others are focused on other problems, but I think some of the other speakers mentioned a lot about risk mitigation and about ways to kind of address the changes or disruptions that come up from these types of events. Maybe just coming from a venture capitalist perspective, I actually tend to look more at the opportunities. And so when events like these happen, they actually do create new opportunities and new problems that need to be solved. And so, for many entrepreneurs, I think that just maintaining a mindset that is one that allows them to adapt quickly to changing environments, that allows them to shift resources to where the opportunities may lie, to capture those opportunities. I think one great example is one of our portfolio companies, Pronetics. In the last few years, they started off as a genetics testing company.
Right.
But obviously when COVID hit, there was this big issue around COVID testing that became one of the most pressing issues, not just in Hong Kong, but also in the world. And they quickly then pivoted a lot of their laboratory facilities and their production capacity into COVID testing. And so now, because of that very dramatic change in resource allocation and focus of their R&D team, the COVID testing business is actually the biggest part and fastest growing part of their business.
Yeah.
And so, just for that entrepreneur, Danny, to be aware and mindful of what was going on in the world and how that could potentially impact not only his existing business, but provide opportunities for a completely new business line.
Right.
I think that's the kind of conscientiousness and the kind of wherewithal that is necessary in rapidly changing times.
Right, exactly. The Pronetics example is a great example of a massive pivot. It's so huge, like you say, maybe it can't even be considered a pivot because it's a brand new business line entirely within medical technology, but it was an entirely new business. That's easier to do when you're a private company, right, Pat? But the many corporates that you work with, when you're publicly listed, when you have thousands of employees in markets around the world, it's more difficult to adapt that quickly. But what overarching themes have you seen with your corporate clients in the way mindset is shifted as a result of the pandemic and the way that they're preparing for future threats such as climate change?
Yeah, well, I guess that's the folly of the system that we've been so used to, business as usual for listed companies. So at the Purpose Business, we work with companies big or small, but yes, traditionally, most of them were listed who navigate sustainability. And in our understanding, everything starts from a place of purpose, right? So vision is where you want to go. Mission is what you do. Purpose is why you get up and do it. If you weren't there, what would people miss if your company isn't there? And of course, you've got thousands of people, layers of bureaucracy that you've built over time. It's harder to pivot that as opposed to the way a startup would. But what's really interesting is I've been in sustainability for over 20 years, and it's a slow burn, as many would know, those of you in this webinar who watch it. yeah, it's almost a lost cause. And sometimes we say, we at the Purpose Business chose the hardest path. First, you got to educate, then you got to convince, then you got to hope that when they buy the service, if they do, that they come to us. But
Right.
it's all changed during the pandemic. And, at the top of the pandemic, the question was, sustainability leaders, are you toast? Single-use plastics, we're all back to it. Nobody cares. Well, actually, we're at that inflection point, which is what the other speakers have said. You're in the middle of a climate crisis, now a health crisis, of course, an economic crisis. And with all the mental health issues that come with it and the solitary kind of confinement that we've been forced into, now it's very personal. So when you get to companies, this is what's driving them. Let's not forget, it's leaders that you need to evolve when you need to evolve a business. So the focus on the S, which took so long to push because it's soft, that's how we traditionally saw it. It's cultural, it's subjective, and you sort of accept that social welfare, that community development, that diversity and inclusion are on the side. It can wait. Let's go calculate emissions because that's easier. There's an equation for it. But the pandemic has surfaced that we have hard pressing issues that you can't separate from running a supply chain. You can't talk about not disclosing what executive pay is when you're furloughing thousands of people. That's just not socially equitable. And I think the heightened sense, again, going back to Chibo's point on opportunities, the companies that have succeeded are really the ones who put their people first, and not just a statement on the annual report, but really kind of speaking to their people and then taking stock of how the business is going to be transforming. And that's where we see our opportunities continuing.
So that change in mindset has to come from leadership, as you say, and that impetus for that change comes from their consumers, from their stakeholders, from their shareholders, right? As they are awakened to these new challenges that everybody's facing the pandemic, they will then put pressure or advocate for this to senior leadership.
I think how much you have open communication, and I'm sure, everyone in this call now knows how distant we really were, how siloed we were. It wasn't more real than during the pandemic. And so when you say stakeholder engagement and your doors are open and your people can come and ask you, that wasn't true when you're in the 27th and the 42nd floor. We find clients who've never even met the head of investor relations and the sustainability team, and they're in the same floor, right? So now this communication, whether they're the local community, your first-time supplier, your JV, your business partner, how do you map the importance of the conversation and how do you hold yourself accountable? I think that's what drives the change.
Fan, what about your clients? Have you seen a mindset shift in how they are planning for the future? Are your wealth management clients planning differently, bearing in mind the future risks posed by climate change, for example?
Yeah, I think the COVID-19 pandemic has been a wake-up call for our clients. So our clients actually revisit their relationship with the environment, and the pandemic crisis also reveal that how vulnerable is their existing business model. And I think the pandemic has rightly focused attention on the action we all need to take in order to build a more resilient economy. The business model needs to be revamped and create a safer and sustainable world. In recent months, you may have heard a lot of news related to China's regulatory action to promote more social justice. The government trying to narrow income disparity and try to promote common prosperity. That is exactly the rise of S in ESG. I think the pandemic really revealed the challenge from the income disparity and the unequal distribution of resources, including vaccine and healthcare facility. So these all bring a substantial impact on the mindset of our clients. Many of our clients are business owners, and they start to rethink about their corporate strategy. How should they mitigate the climate risk, how they can build a more sustainable future for the world as well as their own business. So this also translates into their strategy to manage their company finance and their family wealth. So over the past year, we have seen a substantial increase in investor interest in ESG in ESG investment, and that is partly driven by their desire to build resilience in their investment portfolio. They look for better quality and better balance in their portfolio positioning. And at the end of the day, they want to seek for a more sustainable future.
Right.
That would also need to translate into their financial management.
Right, because I'm sure for a lot of investors, a lot of your clients, that kind of positivity bias that most humans are kind of default to, that like it's just never happened, it probably won't happen mentality, that's now gone because of the pandemic. So people are more cognizant. That's really, really interesting to hear. Shang and Chibo, I want to move over to you and ask about the private equity market. So prior to 2021, global funding had not reached over $100 billion in a single quarter ever. It has so far exceeded that every quarter of this year, with Q3 peaking at $160 billion in funding for private companies. 200 million of that in Q1 this year went to Klook's Series E. So Chibo first, why are investors so bullish when things are still uncertain, relatively uncertain comparatively to 2018, 2019? And can we expect the same kind of behavior in the next crisis?
Well, I think there's relative uncertainty in the secondary markets, given how the Fed has treated interest rates, and just how the public markets have been performing over the last 12, 18 months. And going forward, I mean, there continues to be uncertainty around all the inflation and whatnot, macro trends, which I think has actually lent more interest into the private sector. As there's more uncertainty in public, I mean, like, where else is the capital going to turn? And I think as a private sector investor, from my perspective, like the pandemic has just shifted opportunity sets. They have not kind of made the opportunity set less, and so that there are still plenty of sectors. There are still plenty of opportunities for me to be investing, and as less professional or less kind of experienced investors in this asset class shy away, I mean, that actually just lends to better valuations and more allocation and access in the best deals. And so I think for people who are investors in the asset class for a long time, I mean, it's actually never been a better time to invest.
But there's not a lot of obviously liquidity in private markets, right? You got to kind of make your bet and stick by it. And the world is changing very, very quickly and very, very dramatically. So you may invest in one company that just all of a sudden just the need for that service changes. Mm-hmm. That's what I find a curious a counter to this huge growth in private equity.
Yeah, well, I mean, I think that's why I'm so thankful that I'm an early stage investor, right? We, by nature, I mean, the investments and theses that we have are betting on long-term trends. And so these are things that we believe will continue to be opportunities and will continue to grow as an industry or as a sector or as a business over the next 10, 20 years. And so, these even in like a 2-3 year span, I mean, those are very short kind of time horizons for us. And, I think that the relative risk of going into companies at an earlier stage is mitigated quite a lot by the lower valuations that we're able to invest in them at, right? And so I think these days, with such uncertainty in the secondary markets, for investors to be looking at pre-IPO rounds, I would say that, arguably that's a lot more risky than, what I'm doing, investing at the Series A and B, where, by the time it gets to a pre-IPO stage, it's already 10, 20 or, more in terms of return multiple.
Right. And Shang, you certainly won in the early stage fundraising round. So you successfully had a huge Series E earlier this year. What was your experience of raising money in the midst of a pandemic? And what takeaways do you have for how that may be, for the next crisis?
Yes, I think a lot of people focus on the uncertainties, but on the flip side, there's also a lot of things that people are certain about, right? So whenever there's an external crisis, such as the scale of COVID, I think it's pretty firm to say that there will be consolidation in the market. And for those who survive, they have a huge opportunity to do much better. So if you look at 2008, the banks who have survived that came out of it much stronger, right? So the certainties are around the fundamental demand of consumers. And I would argue that travel and leisure is something that everybody increasingly want to do. And so we really communicated with our shareholders, many of them also invested in the recent Series E fundraising in addition to a new investor, was that there was a huge opportunity to engage with the consumer from a domestic travel and leisure perspective. Now in Hong Kong, in Singapore, people are known to kind of travel cross-border 3-5 times a year, right? And so we would say that there's an opportunity to really reintroduce their backyard to these consumers, and there's definitely a lot of things for them to be excited about to do over the weekend. So on this point, really is about sustainability. It's not really a cost to business, but also a way to add value, right? Having these consumers really focus on the local communities, working with, buying product and services from small, medium enterprises. And we think that there's a lot of value add that we can provide and being a technology platform. So we have worked with the Singapore government in terms of the Singapore Rediscover, really connecting the Singapore consumers with the tourism activity merchants that used to primarily service inbound tourists, but now they have an opportunity to service the local residents. And so really to focus on the certainties, how you can add value, and really view the path towards sustainability as adding value along the way and not just an additional cost for companies.
Am I right in thinking that the pandemic hit about a month after you joined Klook?
Yes, perfect timing, I would say.
Something of a baptism of fire, I imagine.
Yeah, it's a perfect timing.
And as you said, Klook was a travel app in January 2020, and you just elaborated on exactly what the pivot was. What I'm interested in is how internally you managed that and how you executed that, because what you executed is nothing short of a pivoting masterclass. I mean, if it's not taught on MBA classes already, it absolutely should be in the coming years. Can you talk us through some of the key turning points and decisions that you made to take you from staring down the precipice of the death of the travel industry in January 2020, and the decisions that you took to kind of help you get to recovery and eventually growth?
Yeah, so prior to me joining Klook, the company is growing more than 100% on an annual basis. So definitely COVID hit really, really hard. Within 2-3 months, revenue effectively went to zero, right? So the hard decision that we had to do was to think about reviewing our resources in terms of dividing them to must-have, good to have, and not necessary. So effectively, a lot of businesses over the last 12-18 months had to optimize their cost base and really focus on where are the areas that they should be spending to generate the most value for customers, merchants, and employees, right? So we let go a lot more office spaces because we felt that was less important than spending it on technology and improving the efficiency that merchant would use in terms of interacting with the consumers, right? So we also had to think about what are the different ways that we can bring value to our stakeholders, the consumers and the merchant. Now, hotel, as a classic example, is a very mature business within the travel space. We previously did not do hotels, but over the last 12 months, we became a very important players in hotels because we talk to the hotel operators, understand our consumers, and what we did is we created a category called staycation in Hong Kong. This is something that people in Singapore also did, but it really effectively bring hotel stays and experiences into a holistic package. Now, it has been a major driver of our revenue in Hong Kong, and after the COVID hit, revenue came to zero, but now we have surpassed pre-COVID level revenues in here in Hong Kong as well as Singapore, because we really created new offerings to the consumer that also solve the merchant problems of low occupancy. So effectively is thinking about what value that you can drive how do you really make sure that you are vigilant about making sure you have the right cost base and not just overly investing in resources that may not be generating value for the long term.
It's interesting. And that triaging you talked about with the kind of 3 buckets is also something that can be adapted in future, regardless of what the next crisis may be it climate, be it a global recession, etc. Pat, you help businesses operate more sustainably. You're also a business yourself, of course. So one would like to imagine your own business would be set up to deal with an event like the pandemic, given your line of expertise. But I'm sure even you learned something along the way. What did you learn and how will you carry that forward into future crisis planning?
So thanks, Lee. We're really very lucky so I used to head sustainability for a hotel chain up until 2015, and then I started the purpose business. And we're very lucky that from day one, my people, the experts that are far better than I ever will on carbon management, on water, on ethics, they all said, what if we were really there to bring the service of sustainability? But what we're selling, the product that you're selling is really the relationships with the clients, right? Because nobody knew what sustainability was. And there's this compliance piece to it, and there's this must-do tick box, and then there's the aspiration of being Patagonia or M&S. Right. So navigating it and being a partner, one of the things that my team had asked me right from the start was to work from remote, because no one wanted to be full-time strapped, with resources, 3 kids, or traveling and being in distant places. And so we were actually on Zoom right after we started. So our account, I think, is 4 or 5 years old, which is extraordinary, unheard of. And we lost a lot of clients in the beginning, like, what do you mean you're not coming to my boardroom, wherever it might be? Luckily, and here we are, right? So in a way, that's one layer of anxiety that my team did not need to go through. We did not need to go through in various spaces, about 26 of us around Australasia, the US, and the UK, but with an Asian lens to businesses. And I remember one of our newest clients then, who were at the back end of technology, but really needed to pivot, they asked us to come, among many things around climate change and health. But the last question was, tell us how you trust Zoom and Dropbox. Like, how do you go and do this? So I think the foresight, and it had nothing to do with climate or health crisis planning. It had to do with listening to the people. If I wanted the best in the region, the experts said, this is how we want to work, because we are practitioners in sustainability. So there's a professor who also works in corporate through us. There's someone who runs then her own mushroom farm, but she consults on sustainable agriculture. There's someone in my team who really is deep dive in calculations and emissions management, and then being able to kind of walk that outside. And if that meant I get the best of you while you're with your 3-year-old and while you run an NGO on the side, then that's the best, right? So for me, it's listening to people, your own stakeholders, your clients. And this is also one of those things where, again, the question of, oh, your business is going to die in sustainability and the crisis, no one's going to have money and no one's going to pay for it. The conversations we had in 2020 were far deeper in thought. You really had leaders come through and say, all right, if I'm going to transform the business, here's what I'm navigating, and really listening to that, not gouging, not trying to sell right away, but sometimes clients ask and say, I want this report, or I want a net zero strategy. You come back to why they wanted that in the first place. What's driving it? Is it competitive advantage? Is it missing out? Is it really shifting the business? So we have clients who are food manufacturers who actually were food manufacturers, but they also produced a supply chain that was their own. They kind of farm, they have the flour business, they have the sugar business. And so now there's conversations on, to Chibo and Shang's point, there's conversations on, well, if we have all that, then we do have ethanol. How do we then move into the hygiene side of food while still being a food manufacturer? And that's just extraordinary. That's the opportunity amidst crisis.
Chibo, at the beginning there, Pat talked about workplace culture and one of the things they didn't have to adapt to because they already had that in place. So there's workplace culture. There's a number of other different factors, of course, that are the difference between whether or not a startup survives or doesn't, or survived or didn't during the pandemic. What have you seen? What are the differences been in your portfolio companies or other startups you're tracking between the startups that have done okay in the pandemic, even thrived, and those that haven't? What's been the key difference?
I think the lucky thing for startups is that everyone who joins a startup is aware that it's a startup, right? And so the people who choose to join a startup by, I guess, natural selection or whatever, I mean, they are more entrepreneurial, right, in their approach and what they're looking for. And so as the company goes through challenging times, generally speaking, as long as Pat mentioned, there's like good communication and there's good systems in place and there's a promise of a better future. And, like generally speaking, like most of the team members who are bought into the vision and the purpose of the company, they're willing to make concessions to keep the company alive and to keep their dream alive, right? What we've seen over the course of the pandemic, I mean, obviously, when it first, like maybe the first 6 months, some companies had their core businesses affected. Some companies were in the middle of the Series B or whatever round of financing. In those first 6 months, it was actually very difficult for these companies in terms of cash flow and cash flow management, right? Because obviously, a lot of the revenue that they had been counting on all of a sudden goes to zero or goes to, is decreased dramatically. And so because of that, their burn goes through the roof. Their growth isn't according to plan. Their fundraising plans are also all thrown off and delayed. And so a lot of them are going into survival mode. And so we've seen like a number of these startups then, they had to furlough people. They had to let people go. One of our companies, whose main business is in offline experience stores for virtual reality. I mean, like they had all their stores shut down because of the lockdowns, stay-at-home policies around the world. Like they actually went through a full-on Chapter 11 in the U.S. And so they had to declare bankruptcy. They put everyone on leave. But I think the opportunity was, and the silver lining was that having gone through that process, you retain the people who like truly matter to your business. Those people are even more bought in than before because they've realized that they've gone through this trying ordeal together. They've already made so many sacrifices and concessions, and so to some extent they have to make it worth it now to make the company work on the other side. And obviously from a business perspective, I mean, you go through that, you're able to renegotiate a lot of previous contracts. You're able to kind of, go back to your partners, and everyone kind of comes to the table then to push this company and through the pandemic. And so, I think from like a team and kind of human capital management perspective, I mean, I think it really comes down to just communication, like and like buy-in from the management team as well, right? Like everyone has to be on the same line. And so like when people are getting furloughed, I mean, it doesn't make sense for CEOs to be taking like a high salary either, right? And instead of cash, maybe then becoming more generous with ESOP and options. So even though people are taking a bigger cut in their near-term cash and revenue, salaries, at least that they can be more bought into the future success of the company. So those are just some of the things that we've seen our management kind of go through.
To try and get the best talent still working hard to help you reach your goal. And Fan, on a completely different track, I mean, HSBC has put an emphasis on sustainable financing and investment as well. What's unique about this approach, and what's been the impact so far?
Yeah, I think the unique approach of HSBC in delivering sustainable finance and investment is our universal banking model, because we interact with clients across our three global business lines. We have commercial banking interacting with the corporate customers. We have wealth and personal banking that serve our private banking and wealth clients and very much focus on their personal finance. And then we also have global market and banking that serve institutional clients and also meeting their sustainable financing needs. So I think this is a very unique model, and we also learn from the pandemic that we continue to build innovative business solutions in order to meet our clients' changing needs. So take the pandemic as an example, given the huge disruption caused by this public health crisis. We fundamentally change our business operation in terms of business practices. We currently adopt a hybrid working models with on-site working practice as well as remote working, and make it a permanent work arrangement. And this actually enhance the efficiencies and bring more flexibility to our business process. And on the other hand, given our universal banking models that allow us to understand customer needs in terms of financing as well as investment needs, this actually help us accelerate our product innovation. So throughout the pandemic, we actually hear from clients that they also want to capture opportunities from this new global economic landscape. The pandemic has driven digital transformation. This has also bring catalysts to drive the development of a whole series of new growth industries. And according to our own economic research estimates, just to meet the climate challenge, we expect China will invest 200 trillion RMB in the next 4 decades on green infrastructure to drive energy transitions. So these all bring new opportunities, and this actually help us develop innovative investment solutions and green financing services to meet our clients' changing needs. Especially, they're now on a new path to manage the carbon emission risk. They face new regulatory restrictions as we are heading to COP26. All these new policy risks also underpins the need for our clients to look for all these innovative business solution as well as financing offering. So these actually help us speed up our own innovation, especially in the way we interact with clients, including the digitalization of our engagement with clients.
And Shang, Fan just talked about how an organization the size of HSBC is adapting to the current climate, and Chibo and Pat have been talking about listed companies and early stage startups and how they've been able to adapt as well. In Klook's case, it's a little bit different. By traditional definition, you're kind of not a startup, but clearly, you're a private company, but a very, very big one. So how were you able to keep that startup mentality and remain agile and pivot quickly the way you did, given the large size of your organization? You're nominally a startup, but at the same time, you're also a big organization. So how did you keep that kind of startup like agility mentality? And how did that help you go through the pandemic? And how will that help you ride future crises?
Yes, I think it's important to communicate, and I would even suggest for people to over-communicate. In the last 2 years, I think many of us probably miss or lack a lot more physical interaction. So particularly, it's much harder to make sure that your colleagues understand the vision, right? So when I joined, obviously it was at the beginning of the storm, but still had to really instill confidence that the purpose of the company and for everyone who's working at this platform is still valid, right? Really to help consumers anywhere in the world to find, book, and enjoy joyful moments or experiences. So very much to make sure your colleagues understand why they are here, and with that purpose in mind, then they will then adapt, right? And be resilient. And along the way, you perhaps identify people who perhaps are not the most suited. And so you thank them for the effort and wish them the best of luck in their kind of new journey. And then you hire new people who believe in the vision. So I think making sure that the overall organization has adaptability and resiliency starts with each individual person that's in the business.
Okay, thanks for that. And also thank you, Kellen, for your question in the chat box. I've seen it and I'll get to it in a moment. And if anyone else has a question for our panel, please do put it in the chat box because we are coming to the end of our time. I'm going to ask a couple more questions though before I hand over to questions from the floor. The penultimate one is to everybody. I want to know what concrete, straightforward actions, like let's talk real here for a second. Like what concrete, straightforward actions does business need to take to be more crisis resilient moving forward? You know, what do they need in their toolkit in terms of expertise, in terms of contingency plans, in terms of resources, and so on? I'm going to throw that out to the whole floor. Whoever wants to take that one first.
Perhaps I can start first. So I think it's stress test, right? Klook, we have always, a lot of people joke that we have always fundraised 1 year in ahead, right? You need to think about what happens if you don't have any revenue for 6 months or longer. Are you able to weather that? And if you don't, what do you need to do to make sure you can, right? So for personal, individual investing, we all think about, you know, rainy day fund, right? I think that equally apply for corporate, particularly important for startup who are really kind of making ends meet from round to round. So how do you perhaps be a little bit more planning ahead to make sure that your balance sheet is robust enough to weather uncertainty that's only going to increase?
Right. The stress test. Thanks, Shang. What else? Who wants to chip in on what else you need in your toolkit? Yeah,
maybe I can share my observations when we work with our clients and also help them build more resilient business model and investment portfolio. We attach great emphasis on risk management, and we also help our clients to do simulation and scenario analysis in order to assess the challenge from various risks, from macro risk, market risk, together with potential geopolitical uncertainty that tie in with today's topic, the potential black swan event, and test the sustainability and resilience of their business model. And in their investment portfolio, we also assess whether they have well-diversified and well-balanced portfolio positioning to weather all this potential uncertainty, no matter it's from natural disaster, pandemic crisis, or economic recession. So this would help our clients build a more resilient and more defensive corporate strategy and investment portfolio to face the uncertainty.
Chibo and or Pat, anything else to add to that toolkit?
Yeah, so I'm just going to complement what both have said. I think knowing who you're there for is so important. Stakeholder engagement, but understanding just who they are, right? You can't be all things to everyone all at the same time. So obviously the pandemic has forced us to look inwards and value our employees. But you know, what is the extent of that? Your supply chain, they've been partners who grew through the years with you, you know, whether it's Klook, whether it's a hotel that started as a boutique, 10 rooms, and now it's 50. When you are forced into a space like this, you need to prioritize who you're there for. Of course, shareholders come too, but who you are there for, what problems you are there to solve. And it really is heartwarming to hear everyone talk about how clarity of purpose brings you slightly ahead, because that's what's going to guarantee that everyone has that North Star, that they will break their backs a little bit more, but that they're also going to be vested in the company. And this is really one of those things where if you know that employees and your suppliers are key, then maybe it isn't going to be the lobbying to the government that you prioritize first, or maybe the JVs can pause for now, right? You're trying to keep the business alive, and knowing who you're there first will mean that you know how to manage your risks well. In sustainability, we call this materiality, but just again, you can't do diversity and inclusion and water management and air quality and a zillion other ESG issues, you need to know what is your competitive advantage. If you're in food and beverage, it's got to be water, it's got to be sourcing, it's got to be packaging. I'm not giving you a hospital pass and not do anything else. But if you can't manage what is at the core of your business, your operations, then there's no such thing as embracing sustainability. Don't care how many trees you plant. Don't care how many volunteer days you have. You have to address the water crisis if you're a drinks company. You have to kind of manage air quality if you're in the green building business, right? So I think the balance of knowing who your stakeholders are and your key issues, that's what's going to set you up with a clarity of purpose as well.
Chibo, what's the final thing you want in your entrepreneur's toolkit?
I think, everything that the other speakers have mentioned, I think that those are all important. I think, obviously entrepreneurs need to know what makes their business run and focus on those core aspects. But if I were to kind of offer something, a little bit out of left field, but something that I feel like is more and more important as the years go on, and it's a little bit, Patricia alluded to it just now. I would actually encourage everyone at their companies to start off an ESG task force. I think that's an area where that just having a team internally that can kind of take a step back and look at the entire business and see the different ways that they could potentially be engaged in all these important issues, and being able to plan and to develop some sort of initiative or framework around that for their own company. I think that will go a long way in terms of preparing, educating, and ultimately implementing for the longer term. And I think even from like a cash flow or like investment attractiveness perspective, more and more investors are looking for these types of capabilities, right? And so no matter what industry you're in, if you are able to show that these issues are important to you and the ways that you are engaging within your own company with some of these issues and trying to solve some of those problems, I think that ultimately will pay dividends in the future.
Absolutely.
Can I chime in on that, Lee? Just one quick one. An ESG task force does not mean senior leadership team. So for those of us who are not in management teams in this call, the right or the best ESG task force is one that is up, down, and sideways, right? Because the voices need to be heard on the frontliners or from the frontliners as well as C-suite. So thanks, Chibo, for echoing that.
We are running over time, but I'm going to ask one of the questions we got from the audience at least. This is from Kellen Lee, and it's for Pat. She says, "Hi, Pat. What trends or transformations are you seeing in your clients you're particularly hopeful about in helping us build a better, more sustainable future?"
Thanks, Kellen, for your question. I think the social focus, definitely. So focus on people and really navigating what that means, right? Just transparency on labor. How are you contracting your people? How are you paying them? Some of the policies that we have around people is something that companies come to us and say, actually, yeah, that's been a 25-year policy. You say you have an open door, but actually you shut down certain access on Wi-Fi because you don't trust your people. And if you say people are our biggest assets, it's a complete double standard, right? We're also really very hopeful that a lot of senior leadership are beginning to understand that while buy-in and mandate is clear in sustainability, the on the ground, which I alluded to a while ago, on the ground is really where the voices come from. I guess the last thing is this whole net zero piece, which Fan talked about. The devil is in the detail of the net, not so much the zero. Everyone's saying zero, and that's easy if you can offset your sins today and still run as business as usual, right? The net means what transition strategy is there. And right now, this is the conversation. Is it partnering with business partners? Is it finding technology? Is it hearing from your facilities manager in your business what real issues there are? So I think the conversation, the openness of the communication, understanding your risks, it's now really happening. We just need to expedite and maybe accelerate that a bit more.
I want to ask all the panel for the final thought. The one key takeaway, if the audience remembers one thing from this discussion, what should it be? Pat, would yours be remember the S in ESG?
Yeah, and activate your purpose. This is it. Clear purpose, not the vision, not the mission, but your clear purpose. And happy to chat more if other people have questions on that.
That's definitely one thing I'm going to remember. Remember, don't forget the S. Remember the S. Fan, what about you? One key takeaway you want the audience to take from this conversation?
Yeah, I think the key takeaway is to action now. I think the climate crisis is a clear and present danger, and I think it's the time to reformulate your investment strategy, your business model, and no delay.
Chibo, key takeaway, please.
I think another S worth remembering is silver linings. I think that all startups will have challenges and tough times, but there's always silver linings. There's always opportunities within those situations. And so, yeah, I hear that there's a really good book, The Obstacle is the Way. So, I think that entrepreneurs should maintain that spirit.
S for social, S for silver lining. Shang, do you have another S?
S for Shang.
Yeah.
Yeah, that's for Shang. My key takeaway really is to embrace change and transform. And then maybe your firm will become Superman. So that will be the third S.
Right. Thank you so much, Shang Chuang, Patricia Dwyer, Chibo Tang, and Cheuk Wan for joining us. It's been a really, really interesting conversation. Like I said at the top, this is day 659 of the pandemic, which just sounds just mind-boggling when you put it in terms of days rather than months or years. Tomorrow is 660, and I feel everybody that's tuned in this lunchtime will be a lot more clued in as to how to take on day 661, 662, and also the next Black Swan event should it come in the next few years. So thank you so much to all four panelists. It's been a real pleasure to talk to you, and Xiaowei, back over to you.
Thanks, Lee. So thanks, speakers, again, for your time and for your wisdom on this topic. So from what I got away is basically the pandemic has a lot of opportunities out there, and there's always a silver lining whenever things seem to be tough. So big thanks also to our partner, HSBC Global Private Banking, for enabling today's discussion. And to all of you watching, thank you for listening. I won't take up too much of your time anymore because it's lunchtime. So I would wish you guys a good Wednesday and hope to see you guys again next time.